S&P 500 Index, SPX. Daily and weekly chart analysis. November-December seasonal rally continues. In this video, we will analyze the daily and weekly charts of the S&P 500 Index, SPX, to understand the current market trends and provide insights into the ongoing seasonal rally. We will also discuss the long-term chart analysis and the outlook for the index. Please note that the information presented here is based on technical analysis and does not take into account emotions or news events. S&P 500 Index, SPX long-term chart analysis. The S&P 500 Index, SPX, has recovered most of its recent losses, indicating a bullish trend. The conservative S&P 500 strategy, designed to protect investors from bear markets, suggests that short-term declines should not trigger sell signals. This long-term strategy allows for fluctuations in the market and does not attempt to time every little up and down. Currently, the strategy is in a bullish position in the Rydex S&P 500 Nova Fund, RYNVX, or other S&P 500 index funds or ETFs such as SPY, S&P 500 Index, SPX, and current chart analysis. The benchmark S&P 500 Index, SPX, has broken out decisively and continues to move higher. However, according to JP Morgan strategists, the index could fall to 4,200 by the end of 2024, down about 8% from current levels. This is the most bearish outlook among major Wall Street firms. Despite these forecasts, other experts such as Morgan Stanley's chief U.S. equity strategist Michael Wilson believe that the SPX could end 2024 around 4,500. Resistance at SPX 4,600 has halted the recent advance, with the index closing just above 4,600 at the end of the week. It is important to note that these are just forecasts, and the Christmas rally is still ongoing. Economic forces, including supply and demand imbalances, have led to the worst stretch for U.S. government bonds since the Civil War. Bond portfolios have been negatively impacted, and investors are demanding higher yields. Market-moving economic reports released this week. Several economic reports were released this week, providing insights into the state of the U.S. economy. Factory orders in the U.S. sank 3.6% month-over-month in October 2023, indicating that the industrial sector is suffering from high interest rates and inflation. The number of job openings fell to the lowest level since March 2021, with declines reported in various sectors. However, the ISM Services PMI increased, pointing to stronger growth in the services sector. U.S.-based employers announced plans to cut 45,510 jobs in November, indicating a loosening job market. The number of Americans filing for unemployment benefits edged higher, suggesting a cooling labor market. On a positive note, the University of Michigan's consumer sentiment surged in December, largely driven by positive shifts in the anticipated path of inflation. The non-farm payroll employment increased in November, reflecting job gains in healthcare, government, and manufacturing. Conclusion: the Thanksgiving to New Year's seasonal rally continues to push prices higher in the S&P 500 Index, SPX. The current analysis suggests that the advance may hold through December. The SPX position in this strategy is bullish, and aggressive traders should consider the Rydex Nova S&P 500 Fund, RYNVX, or other bullish S&P 500 index funds or ETFs. However, it is important to note that these analyses are based on technical indicators and should be considered alongside other factors when making investment decisions. As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.